Just go with it.
Hello.
Hello.
I'm in my car today. What's that?
It's getting a little dark outside.
Oh, okay.
It's not over there?
Neighborhood is overcast, but not threatening.
Yes. I want to take the kids to the pool today. Oh, well. Another day.
Blow over.
Be nice. So obviously, Ruth, did we introduce ourselves? I'm Danielle Tully.
We did not. I'm Ruth Sheehan with eXp Realty.
We're a mess today, apparently.
You know, in this business, we try to plan, but then stuff happens. So we have a listing going live, and there were several delays on getting it ready, getting it painted. Not really delays. It just took, we were optimistic and didn't quite hit the level of optimism necessary. So Tim and I are here staging the condo for sale, and the photographer is coming all at the same time. So I'm in my car and Tim is meeting the photographer. We'll have those pictures soon. So if you're looking for a 3-bedroom condo, we've got it. Super cute. And this is just how life goes as a realtor sometimes. So welcome to it. This is putting the real in real estate. This is the real stuff here.
Yeah.
Trying to get everything, all those moving pieces. I feel like an air traffic controller sometimes getting ready to launch a new listing. So what are we talking about today, Danielle? We have a pretty fascinating
topic.
Conversation.
Yes. I think if there's anything that needs to be discussed, it is FHA buyers or FHA loans. We're not going to get into too much into what an FHA loan is, although I do want to put some of the kind of higher information out there. But I just feel like there is so much out there that is wrong or biased about FHA buyers or accepting FHA buying, or most specifically FHA appraisals and what that means. And so I wanted to kind of highlight or talk to you about what it really is, why people are apprehensive, but also why people need it and use it, and that it's all good. Sometimes there can be some bad, but it's not like somebody who has the plague. It's not something that needs to be avoided.
To be afraid of.
Correct.
And especially if you have a skilled realtor on your side. I mean, we keep coming back to this, but I think it can't be overstated. There are a few extra hurdles. There are a few extra pieces that need to be navigated. And so you need to have someone who understands how that happens and what the pitfalls are and how to watch out for them, how to vet these specific buyers ahead of time, and how to get through the process with it. It can be very smooth. It can be excellent. And it's a great program. It's one that I've taken advantage of myself over our life buying houses.
Yes, absolutely. So it's one of those that we really want to be real about, the mostly positive, and sometimes there are some pitfalls, as you said, but I don't think that they're out of the ordinary. So we'll start with that. So basically, I want to we really like acronyms here. We always like acronyms, right? Pretty much every profession has their own. So I want to at least kind of start and tell you what this is. So FHA. FHA is Federal Housing Administration, and that is part of the United States government's HUD, another acronym, for the Housing of Urban Development. So this is a federal program, and it is a way that the federal government, because what's one of those American dreams, right? It's buying a home ownership, being able to call something your own. And so they have helped this program, because traditionally it was up to the banks, and every bank and lending institution had their own things that they wanted from a buyer. They still do. And that's generally what you'll see as a conventional loan. An FHA loan is an alternative to that.
You have an incoming call.
More real in real estate.
To answer a call, push your voice command
Yeah,
button.
more real in real estate. I have it on Do Not Disturb. It's not working. Just a minute, please.
We should have some background music like queued up. Like we're in an elevator.
Right there.
Well, I'll go on. How about this, Ruth?
Thanks. Go ahead.
So some of the reasons that people might use FHA is a lower down payment. So traditionally for the longest time, conventional loans were 20% down. And that was a very hard down payment for people to handle, especially with the rising prices. You know, a $200,000 house, $20,000, that's $40,000. Most people don't have $40,000 plus closing costs if they've never bought a home before and don't have equity. You know, I'm saying a lot of people who have those type of down payments usually come from some sort of previous investment that they've had.
Yes.
So the
You're selling your first home and you're getting a bunch of cash and you've got that to put down on your second home. And you have, 5 years of home ownership and paying all of those bills on your credit reports. And you've established your credit because you've been using it for a long time. You're going to be in a much better position as far as a bank is concerned to make that purchase. So you've got a chunk of change, you've got great credit, you've got solid work history. That's pretty much what a bank is going to look at. If you are not in a position to have any one of those things, then the bank is going to say, we might need a little bit of a guarantee from somebody else that we're making a good investment here. And so that's where the federal government says, we want more people to be able to take advantage of home ownership. We want more people who might be, perfectly good borrowers, but on paper, they've got a couple of things that aren't going to look as good as somebody else. We still want them to be able to buy homes and take advantage of everything that includes.
Correct. So that's the down payment. Same goes with credit score. This credit score that an FHA lender or mortgage will allow is a little bit more lenient than somebody who's going for a conventional loan traditionally. And it can go as probably low as, what would you say, 580?
I think that different banks have
different changes a little bit here
numbers,
and there.
And then sometimes it just kind of goes up and down. I don't know what it's based on.
Remember it spiked for the first month or so after most of the shutdowns last March and April. It went up 100 points in a lot of lending institutions and basically overnight. But FHA, it allows people, and just because there's a low credit score doesn't necessarily mean that their credit doesn't add up, doesn't necessarily mean it's because, they're in debt up to their eyeballs and haven't paid a bill. Sometimes it's no credit, as Ruth was saying, that younger people there's a lot of programs out there that talk, or people who are comfortable paying with cash, or who buy a car on their own, again, cash or, don't have credit cards because they don't feel it's necessary. And those are the type of things that affect your credit score. People don't want to participate or haven't participated too long in it. If you're 22, 23, 24, there are people who want to buy houses that young, and that's, great. But if they've only had credit for 3 years, only had a bank account, they didn't have a credit, numerous credit accounts, or they've only had a credit card for 2 years. That's part of your credit score, is the length of your accounts. So, this allows that to help people, or people, I'll tell you what, I had a short sale 10 whatever years ago. I don't know, I've lost track of time. It's been longer than that, but still, that affected my credit score for a while. And Oh, you're going out a bit.
Am I down?
Yeah, not great. But it could be one. It could be. It could be just something small on their credit score that's affecting them, and this allows overall everything else being good to move forward. Debt to income ratio also is a larger percentage is allowed for FHA, and sometimes they just have down payment assistance, further down payment assistance program outside of it that really helps people get home ownership. So it's just a program to try to help people who need a little help from various aspects. So it's not people who shouldn't be buying, or that they're necessarily going to change their mind, or they can't afford your price or anything like that. It is just needing help this time and wanting to do something better for themselves. So that's a little bit about what. Yes, I can. You're coming back. Yay!
Yay! Hi.
So that's a little bit about what an FHA loan is and why somebody would want it. I wanted to talk about and explain what this appraisal is that people get upset about or worried about. Because there are a few things about the appraisal that makes it different than a conventional loan. And the first and most important thing that can be scary to a seller is the appraisal stays with the home for a period of time. So if you have a house that's $280,000 and you go under contract with an FHA buyer and they have an appraisal, if that something were to happen to that buyer late in the game, and they have to, after the appraisal, and they have to walk away, or the deal does not come through for any reason, if that house at 280 appraised at 290, then the next buyer who comes in who is an FHA, boom, it's in there, it's done. It's basically, it's 290 now. They're gonna be able to get that $280,000 loan.
Which happened to us recently, if I can tell one of my favorite anecdotes. We had a buyer who everything fell apart a week before closing. This year has been terrible for the number of homes we've had to sell 3 or 4 times, and this was one of those. Buyer deal fell apart near the end. We had an appraisal for well over full price. And in this market, appraisals in general have been a gamble because prices are appreciating so quickly, or have been. So we were very worried about having to go and get another appraisal when we had a very good one. However, because it was FHA and it sticks with the property for 6 months, I was able to put out to the public and to all of the other realtors and say, if you have an FHA buyer who might be having a little trouble competing in this market, I want them. So here's what our appraisal is for. Come in with a good offer and you have got this house without having to do an appraisal in a market where appraisers are also very busy and overbooked. Yep. We were able to close that second deal in 2 weeks. So it worked like a charm. It was a huge advantage. If we had had a conventional loan, we would have been starting all over. And our clients were under contract to buy a house. So it was very important that this deal came together. So conversely, in different markets, it can be difficult because if it underappraises, you're stuck with that appraisal for any other FHA buyer. But if you've got one FHA buyer, it's, that's just the gamble you're going to have to take. You take a gamble with any appraisal. We've had perfectly solid market values that should have appraised it should have been a slam dunk, and we've had appraisals come in, all over the board. It happens.
Correct.
So it's really not something it's just something to be aware of. Correct.
Something else is you'll hear about the repair requests. I'll go over the list of the kind of most popular ones that I've heard of, But I want to say that I feel like this can happen to anybody. This can happen, a buyer who has a convention. Now, this would happen after inspection. So you go through the inspection, you go through the AI period, the buyer and you as a seller or whatever kind of talk about what may or may not be handled in the house. Now you think you're beyond that. Now the appraiser comes in, and within his appraisals or her appraisals, they might find a couple things that are warning signs or things that need to be handled from that appraisal. And so most of them are chipping paint or peeling paint. Now, this is not done to be annoying. Here's the other thing. There's always a reason, right? This isn't just to make your life miserable. If you have
it seems like it sometimes.
If you have peeling or chipping paint, especially if the home it was built before 1978. I don't know if they say anything if it's after 78. They do. Well,
they still don't like the peeling paint.
I think it's not making the assumption or something. But 1978, right? It's lead. It has everything to do with lead. They are trying to put parameters in here to protect the homeowner, because if the homeowner is putting all their savings and they are just wanting to be that home buyer, they don't want to find out in a year or two because something major came up that now these people cannot either maintain the home or pay their mortgage because they had to deal with something else. So it is about making sure that the homeowner, the new homeowner, is somewhat protected. So they're looking for things. So this one is a safety issue. It's handrails. 3 or more steps, I believe, is the minimum. So if you have some steps going up to the entrance of the home, there has to be something. It could be solid. It could be a rail. It could be interior as well.
It has to be graspable. Where's mine? It has to be graspable.
Okay.
And then sometimes the stair height. So if you have a bottom stair that is extra high, they will often make you put in another stair or adjust the height of that step. Sometimes stepping out of a sliding glass door, someone might not have a step where you ought to have one. They'll require that be added.
Okay. So things like roofs or major appliances have to have a useful life, usually about 2 years, maybe 3. But again, not that everybody's putting in brand new things, but but I think that if it's working and it's clean and if you've put the effort into making sure that home is in a great condition before buying it, or selling it, I don't think that's much of an issue.
Yeah, and even in okay condition, if it's livable, it's going to be fine with FHA. They might have a couple of little things. You might need to add a handrail. You might need to, scrape some paint around a window. But I've heard a lot of people get hung up on will it pass FHA? And I think that's kind of not how it works. I mean, if it's livable, yeah. If you don't have floors, like literally floors, it's not gonna. Is that your tornado warning?
No.
Okay.
Sorry.
That's okay. If you don't have a kitchen, there are things like that. That makes it unlivable. That's not an okay house under any circumstances except
Correct.
for a flipper. But if it is a reasonably decent conditioned house, it's going to be fine. Maybe they will have a couple of things that you need to fix. That's okay.
Yes. I think, yeah. So, I mean, the running water, making sure that if it's a furnace or a boiler in a house, in an area that gets cold, or making sure that, things like that, they don't want pipes to be bursting in the middle of the winter or anything like that. Windows not broken, or they have to work properly. You have to be able to open them up. Again, it's like a fire hazard, not being able to escape. So sometimes people paint windows closed. not a good idea anyway. As you,
Right.
the homeowner, probably should be able to open up and, your windows whenever. The broken windows, again, we're going to know this, we're going to ask you, sellers should know if they have a bunch of broken windows that they're not going to get top dollar and it's going to be harder. So chances are I'm going to tell you that you might want to consider replacing them if you have the means before putting it on the market.
If it's just broken glass, it can be repaired usually, and that's not particularly expensive.
I meant replaced in the sense of it's no longer broken.
Replace the glass.
So, yeah, I mean, a lot of these things we'll talk about prior to putting your house on the market anyway. If your house, for one reason or another, has delayed maintenance, that's okay. If it has to be as is, but then that's where we would talk about who you're going to be able to attract and the price for those buyers being reflective of those needs.
And if the FHA appraisal requires something to be done, it is required. They don't care if the contract is as is. They don't care if you want to scrape the paint. It's a condition of the loan, and it will not happen if that's not taken care of.
Correct.
So what about here's a crazy idea. What if the seller doesn't want to fix it, but the buyer will? How does that work?
Well, it is supposed to be something that the seller takes care of.
And we wouldn't really advise anybody to go spend money or time fixing someone else's property that doesn't belong to them.
Remember last week's conversation about the kitchen in somebody else's home?
Yeah.
It's everything, Yes, maybe it's not a $20,000 kitchen, but or more. But yes, there is some liability to that. But there have been cases where buyers agents have tried to negotiate. Hey, if anything, take this offer, and if anything comes up, it will be handled. Luckily, I've never had that happen.
Somehow the seller wakes up one morning and the paint has been.
Yeah, the paint fairies came.
Exactly.
And they handled it. And to be honest, how long have I been doing this? I don't know, 9 years? I'll go with 9 years I've been in the industry. And in all that time, I don't know the percentage of how many FHA to conventional loans, but I've only had one seller need to do anything to their home. And it was a quick paint issue. And it was on the very, very tip top of like a point on the side of the house, and they just didn't know it was there. And luckily, one of their sons had a friend who came over, and for like $100, boom, 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 done. And the deal stayed right on track. Not saying that it's, great to have to, spend more money after you think everything's kind of summed up and ready to go, but it doesn't have to be the end of the world either.
Yeah, it's minor. They're not going to come in and say you have to, unless there's something terribly wrong, but that's going to be caught at an inspection. So I guess what we're saying is it's no greater risk than any other loan unless you've got tons of peeling paint, no handrails, your steps are too high, you have no smoke detectors.
That's another one. Smoke detectors and CO detectors. But I always tell my clients to make sure they have.
But they should be there anyway. So those are $25. Go get some.
Right.
So yeah, the things that come up are typically minor unless you have something wrong with your house, and then that's a problem for any buyer.
Correct.
So,
exactly.
No reason to be afraid of the FHA inspection.
I agree.
And I think that's pretty much the differences. Everything else is really generally the same as anything else.
Yes. And if you're thinking about selling and you are worried about FHA buyers, then we'll have a conversation. Tell us what it is about your home that you think might be a red flag, and we can talk that through. But I think that, of course, it's great to get a cash buyer. Or it's great to get somebody who's putting $100,000 down. But sometimes the buyer for your home is going to be somebody using an FHA loan who is putting 3% down or 3.5% down or getting some sort of down payment assistance program. And it does not necessarily mean it's a bad thing.
Oh, I just thought of one other thing.
Oop.
Condos. So condo associations have to be approved by FHA. They will typically know that, or the listing agent will, but as we've discussed, that's, we're not all the same. So sometimes if you are looking for a condo and you're an FHA buyer, or if you are selling a condo and hoping for any sort of buyer, you're going to want to make sure that your realtor understands this. Many don't. If it's a condo association and it doesn't have anything to do with the style of the building, doesn't matter if it's 2 stories and you call it a townhouse, it has to do with the way that the association is set up.
Mm-hmm.
So if it's set up as an association, it must qualify for FHA. And what that means is that the board typically has to file paperwork on a regular basis. It's a pain in the butt, and oftentimes they choose not to do it just because it's a pain. That's going to cut out a lot of potential buyers for a property that's a great opportunity for FHA buyers. Condos in many places are at, the lower price point for the area because they're smaller and because they're collectives. And so it's, your likelihood of getting a first-time buyer or someone who might be, getting a divorce or in another position where a condo is a perfect home for them, you don't want to cut them out by not having that availability. But we see it really often. Now, in the last year or so, they allowed for spot approval. And so you're supposed to be able to get approval for 1 unit, but I have not been through it myself. I've heard that that's still quite difficult. So if you are a member of a condo association, and particularly on the board, my strong suggestion to you is that you do what is necessary to be FHA approved.
Yes.
All right. So what's that?
Can you hear me?
I can hear you. You're frozen on my end, but I don't know if that's
I don't know if that's true or not, but okay. Yes, I'm frozen on my end too, but we'll see. But
right.
Yeah. So again, if you have further questions about FHA or why it's good for you, we have, and that's the other thing, we have lenders. If you have further questions about would you be eligible for an FHA loan, all of our awesome preferred partnered lenders all deal with FHAs. Loans.
And there's some situations even where, like, we just sold a multi-unit property, and for a conventional loan, you need to have 20 or 25% to put down. That's kind of a lot for, again, somebody who's not selling something with a chunk of change or a major investor. So an FHA loan is the perfect loan for a property like a multi-unit these days. And our lenders are great at that. So we can put you in touch.
Absolutely. So until next Friday.
See ya.
Have a good one.